All right, what's up, everybody? Another Friday, Free Real Estate Advice Fridays. This is episode number 46. And today we're talking mortgages. I got two guests from Movement Mortgage here in beautiful Clinton, New Jersey today. So we're going to talk about a few things. Actually, these guys were nice enough to come to our office recently and talk to us about buying points, which I think is a very good conversation. Number one, I'll say that most of my clients have no idea how this works. I say in a lot of areas of real estate, and this is definitely one of them, that, you know, as an agent, I know enough to be dangerous, but I don't always have all the information to talk through it eloquently, and I defer to my professionals that I work with, and this is a great example of that. So Joe Bonadus, who I've worked with for a very long time, came by our office a few weeks ago and talked to us about points, especially as it relates to rates and how they've been rising lately. So Joe's going to talk about that. And then we have his colleague, Jeff, who's going to talk to us about their program that is specifically for home sale contingent buyers, which we have a lot of these days. It's a competitive market. And if you are home sale contingent in purchasing your next home, it's definitely a good strategy to be able to remove that contingency and make your offer a little bit more competitive. So without further ado, I'm going to invite these guys in. And how we doing, gentlemen?
Good, Craig. Thanks for having us.
Good, Craig. How are you?
Absolutely, my pleasure. So we do have a few people on. If anyone is on and wants to ask questions as we go through this, please just go ahead and comment on Facebook or YouTube or LinkedIn, wherever you're watching. And I'll be sure to kind of moderate and put those questions up. But we're going to kick things off with Joe. And Joe's going to talk to us a little bit about purchasing points, which I think is a area that a lot of us have preconceived notions about and don't know a whole lot about, but I thought Joe did a great job of explaining it in the office to the agents. So go ahead, Joe, and kick us off.
Thanks a lot, Craig, for the introduction, man. And do we have the chart up for everybody to take a look at that we put together?
Yeah, let me add that right now. There you go.
Okay. Good, so I can focus on one screen here. So first of all, Craig, thanks for having us on. What I first want to just define is, what is the point? You know, people listening out there might not understand real estate terms. So let's define, first of all, what a point is. A point is essentially a fee that you pay at closing. That's pretty much prepaid interest that is designed to reduce your interest over the life of the loan. Okay. So you basically pay some prepaid interest at the time of closing to secure a lower interest rate over the life of the loan. Now, the spreadsheet that we put together here was based on a $400,000 loan amount. Just so you know, rates have gone up a little bit since last week when we put this together. So rates are a little higher, but this is still a good illustration as to the power of paying points and the benefits of it. So a point is 1% of the loan amount. And it's not always, you know, a whole point that you have to pay. Sometimes it's 1.5, 1 3/8, 1 1/4, 2 1/4, depending on what you're looking to accomplish. So I pulled up our pricing, last week and kind of put this little chart together. And essentially the par rate that day, without paying any additional fees, without paying any points, was at 7.125. And on a 30-year fixed rate loan for $400,000 at that interest rate, you were looking at a principal and interest payment of $2,695. Now, as you go through the chart, you'll notice the cost, okay, those would be the points being paid, goes up, and your interest rate and your principal and interest goes down. The idea is that by paying this upfront fee, you're going to have a more affordable monthly payment as you go and actually start making payments on the loan. So at the 7.125, that was at 0 points. So there was no additional cost, but there's no additional savings per month. That's just what your payment is. When we go down to the 7% interest rate, the principal and interest goes down $34 a month. The cost to do that was $1,000. $1,000 means that was a quarter point, because if it's a $400,000 loan, 1 point would be $4,000. This is a quarter point, so it's only $1,000. And for that $1,000 up front, you save $34 a month, which means you would make that $1,000 back in theory within 30 months, which is a 2.5-year payback period. And that's something that I typically think is a pretty good idea. Generally speaking, any points that you're paying, in my opinion, you should make your money back in 60 months or less, or it is not worth it. Okay. Because most people will either refinance, sell the home, or move on within a 5 to 7 year period typically. So you don't want to spend too much on points if you're not going to make that money back within, like I said, about 60 months would be the tops that I would recommend. Again, going back to the pricing from last week, 1 point was getting us down to 6.875% on a 30-year mortgage. Now that was 1 whole point. You can see the cost is at $4,000 exactly. However, that is saving you $67 a month. The payback period is 60 months on that one. So that one's like kind of right at the point where I'm like, it might be worth it, might not, to go that route. Going down to the 6.75, it was costing a point and 3/8, which was $5,500, but your savings was over $100 a month. And you're making your money back in about 55 months. So if you have the extra funds to spend, this could be a good idea. We've had a lot of clients that were possibly going to put 20% down, 25% down. And after we ran the numbers, it made sense to put less money down and put some money into paying points. By the way, points should also be tax deductible, because it is basically prepaid interest on the mortgage is essentially what you're doing. And always check with a tax professional, because there's all sorts of different guidelines and they seem to be changing that type of stuff all the time. So always with a tax professional, but in general, points should be tax deductible for you. And it's a nice way to lower your payment. I did one that was kind of on the extreme end of things, and that was to get down all the way to 6%, which was the last column there, column H. And with that was actually paying 3.5 points, which is $14,000. It's a lot of money, but you were saving nearly $300 a month on your monthly payment. And a lot of times, I always say people are buying the payment when they're looking at houses. They want to know what the payment is. So by paying points and getting the tax deductions from them, you can actually benefit tremendously. When you think about it, it's going to take you 48 months to make that money back on that 3.5 points. However, let's talk about it, 10 years. Now, I'm going to have to grab my calculator here real quick. But let's say you're in that house for 10 years. So that's an additional 72 months on top of what we already had there on the payback period. And in that additional 6 years, you would have saved over $21,000 additional that you didn't pay in interest. So points are not the enemy. In the past couple of years, a lot of people haven't even thought about paying points because the interest rates were at historic lows. There really wasn't any driving force to really make points. But with the rates being now the highest point in 20 years, it's definitely something that you should think about, talk to your loan officer about, and see if that's the right decision for you. Because like I said, sometimes it makes sense to not put that 20% down. Maybe you put down 17% and you pay 3 points. More than likely, you're going to end up with a substantially lower monthly payment if that's what your big concern is.
Yeah, so I think what we hear a lot on my end is a lot of buyers are saying, hey, I see the rates have gone up quite a bit. We're going to put things on hold for a while. And obviously not talking about necessarily speculative buyers, people that are taking advantage of the fact that rates were 2.8 or whatever they were back, 12 months ago. But people that need to move regardless, they need a new house. They're relocating, they've outgrown their house, they need to downsize, whatever the case may be. I mean, something like this obviously is, one way to approach this. And I think getting rid of that notion that's out there that I have to put down 20%. I don't want PMI, I have to put down 20%. I mean, what can you say about PMI rates in current day to someone that hasn't purchased a house in 10, 15, 20 years?
The PMI rates are a lot cheaper than they used to be. But again, it does, when it comes to a conventional loan and you're dealing with PMI, there's several factors that go into it. What is their debt to income ratio? What is the credit score? How much are they putting down? Okay. But in general, we find that the mortgage insurance on conventional loans with people that have decent credit scores are pretty cheap. And like I said, it's always a case by case. And I don't like to make blanket statements. Sure. But everyone should be looking at the different options available to them. When Jeff and I are going through a client situation, we look at them as the individual, what they're looking to accomplish, what they're comfortable with on a monthly basis. And we're going to do our best to get them into that situation. And like we said, we've had several clients that were, I want to put the 20% down. I'm like, well, listen, even if you put 17% down, you pay 3 points. Yes, you have mortgage insurance for a short period of time. Okay. I mean, if you put down 17%, you're probably only going to have mortgage insurance for probably about a year or so. Okay. And if you're putting down 15%, I mean, it's, $50, $60 a month on the mortgage insurance, but by paying those points, you just saved yourself $200 or $250 a month.
Right.
And the mortgage insurance will go away once you have 20% equity in the home. So that's not a permanent thing either. Whereas the interest rate reduction that you're getting by paying points is permanent. That is for the life of the loan. So in this example that we gave here, if you did pay 3.5 points, you're at 6% on a 30-year mortgage fixed.
Yeah. Yeah. And would you say anything to the people that I always caution people not to be real estate speculators, whether we're talking home prices or interest rates? Obviously, I'm sure you get this question as much as I get the question of how is the market. What do you say to people that say, we need to move in the next 6 months, but we're going to wait a little bit to see if rates stabilize?
I mean, you can always refinance down the road, but these prices are not going down. That's really what we're seeing, Craig, is that prices have not all of a sudden plummeted because rates went up. And if there was ever a time where you would see rates or prices really drop, it would be with this rapid run up in rates. Rates were around 4% back in June. Okay. Since then, we're now up into the 7s. For each 1% that rate went up, their principal and interest went up 13%. So if we're seeing rates 3% higher than what they were a couple months ago, that means that their principal and interest is up 39% in that time frame. So if prices were coming down because of this, waiting it out might not be the worst idea. But the bottom line is we don't have the inventory available, and I don't see it coming anytime soon to actually bring down these prices. Craig, you're probably seeing this as well, but how many times do you see a price reduction? Say the house is listed at 6, they drop it to 550, they end up closing at 605 because they dropped it to 550 and now a bidding war ensued.
Right. Yeah. Yeah. I mean, that all goes to the strategy of how you want to price. And we talk about that a lot because, the mistake that a lot of people have made in recent months is they put the house on the market, let's say for $500. They get an offer for $575. That offer falls apart. And then they put it back on the market for $575 and it's crickets. And I say, well, that's not how you got that offer for $575. You got that offer because it was at $500 and you had a lot of people that were bidding for it. So again, this is always just kind of my talking point is I caution people to be very careful with speculating on real estate, because if we were all good at speculating on real estate prices and rates, we wouldn't have to be doing what we're doing right now. We would just be able to just sit back and play the market.
Absolutely. And none of us have a crystal ball.
Yeah, absolutely.
Nobody's got a crystal ball, but my recommendation is when people ask me, well, Joe, what do you think I should offer for this house? And I tell them, I defer to your realtor on that. Your realtor is the one that has checked the comps. Your realtor is the one that knows the market in that particular area. If a house is listed at 550, it doesn't necessarily mean it's worth 550. The comps may say it's worth 6, and maybe they purposely priced it low to get a bidding war. Or maybe the comps say it's worth 5, and you just have a seller that is adamant about getting some crazy price for the house that's really not a legitimate expectation. So to me, it's about the comps, and it's going back to the basics at this point. I think the past 2 years, people got away from the basics because everything sold, and it sold fast and for more than it probably should have. And it's kind of nice to go back to the basics and actually look at actual solid numbers on paper and say, hey, this is what actually makes sense. And I think people are more cognizant of it. I see fewer and fewer deals that are, way over asking price and things of that nature. I think people are being much more selective about what they're putting offers in on. And overall, I think now is not actually a bad time to buy, though, because the competition is significantly less than it was. If you tried to buy a house in the past 2 years, you commonly were up against 20 other offers. Okay. Everything was going well above asking price. Everyone was waiving appraisals, waiving inspections. And that's another major cost that people, were really taking on, were all these inspection issues. I mean, I had people buying houses with a lot of inspection issues, nothing that was going to stop the deal from going through. But when you add it up, maybe it's $10,000, $12,000 worth of repairs on the house. And now you're seeing that sellers are a little bit more likely to work with you on that, or possibly provide a seller's concession or something along those lines. So even though the prices are still are up there, and rates, like I said, are at a 20-year high right now, you may end up still paying significantly less than you would have paid getting into a bidding war in the past 2 years. There's more things to choose from right now. It seems like there's more inventory, more days on the market. So you can always refinance down the road, and that's pretty much where I'm at with it is, I do believe these rates are going to come back down sometime within the next 2 years, hopefully within the next 6 to 8 months. And when that happens, just be ready to refinance. And hopefully we get something back into the fives or something along those lines. But again, nobody's got a crystal ball with these types of things. And we're all just hoping to keep going here.
And Joe, what percentage, I mean, completely ballpark, completely speculating, but what percentage of people that take, outside of the people that got to 2.5 to 3.5% during the pandemic and whatnot, what percentage of people that hold a 30-year mortgage end up refinancing at least once?
It's a huge percentage, Craig. I don't know what it would be, but I would venture to say probably 90% plus.
Yeah, and that's what I'm always kind of telling people is like, very few people just lock in a rate and stick with it for 30 years, make 30 years of payments, and that's the end of it. It's really a lot more fluid than that. And I think, especially on the first-time home buyers, they're just like, well, how do I even know I'm going to live here for 30 years? I'm like
I said, most people, I think on average, still the U.S. average is people sell a home within 7 years, basically.
Yeah.
And that's why part of my advice in the beginning of this was, don't pay so many points that you're not going to make your money back until you're there for 10 years, because you're probably just wasting money at that point. Make sure you're making your money back in 5 years or less for sure. To me, ideally 4 years or less, And like I said, it's a way to keep the payment lower for the time being. You can write off the points, so it is a tax benefit as well if you do pay the points. And right now, I mean, I think on average, we have people paying about 2 points for pretty much every deal right now. Most people are paying like 2 points because they do want to get that monthly payment down. They do want to have some flexibility in their monthly cash flow.
Yeah. Yeah. And, to everything that you're saying, and I think I mentioned this when you talked in our office, I mean, so especially, on the seller side, but also on the buyer side, over the past 2 years, we've benefited from just a hyperactive market. And over the last 6 months, we have to get back to a lot of the strategic decisions that we used to have to make. Marketing a house is much more important. Making decisions about down payments and stuff like that. So along those lines, I thought this was a fantastic conversation about taking that attitude with you guys. Is like, all right, here's everything I got. Give me a strategy that makes sense for me. And you guys have made very clear that it's a case-by-case basis. And I think that's huge to just be just as strategic. I will say that in my experience, the people that are using certain types of banks, your big banks, they have a very different relationship with their lenders than I have my clients who have local lenders like you guys. I always say the difference is you want to call an 800 number. They say, okay, let me bring up your file. You hear a bunch of typing, or it's Joe on the other end that's like, oh, hey, John, what can I do for you? Or you already know why they're calling because you're anticipating a call. So it's a very different relationship, and that strategic relationship is so important right now. Yeah,
I mean, we're doing a lot of coaching as we get the pre-approvals done for people and stuff, and we talk about the different options available to them. We help a lot of people with credit, and I'm not just talking, bad credit just to get a deal. And a lot of people are a 700 credit score, but if I can get you to a 740, your interest rate's going to be 0.25% lower. It's things like that my team and I go the extra mile for, and we really try and, consult with each client and look at their needs and try and put them in the best situation possible. I always tell people, I could tell you all day what you qualify for. I can't tell you what you can afford, your lifestyle, your spending habits. Right. Far better than I ever could. And it's our job to piece it all together. Doing a mortgage pre-approval in this type of situation, it's a lot like doing a jigsaw puzzle. Give me all the pieces. If I got all the pieces up front, I'm going to figure out how they all work together and, make a pretty picture for you at the end of it.
Yeah. And I also have been reminding people a lot, it still is a competitive market. It's not 20 offers, but generally it's 5 to 10. If you pick the nicest listing in town and here in Hunterdon, you're probably looking at 10 offers. And I tell people the strength of working with a local lender as well, because not only is it my confidence that pre-approval is airtight, but it's also the listing agent's confidence. So if I can tell another listing agent, hey, listen, they're working with one of my preferred lenders, that's a huge vote of confidence. There are certain banks that when we submit an offer and our client insisted they want to use, generic big name bank, and I put that into the listing agent, they're like, ooh, boy, this bank, huh? I've had some problems with them. And that's not going to help your competitive situation. So again, using someone like you guys who is, so strategic, and I know what you go through with your pre-approvals and making sure those are airtight. And I know you help us a lot in looking at pre-approvals. I had a deal just not too long ago on a home in Milford, and we found out 2 weeks after we were supposed to close that they didn't qualify, the buyers didn't qualify because of their credit scores. And they weren't even close.
That's amazing to me.
Yeah, I know.
I mean,
I was like, how can this be?
We do hear this stuff all the time, Greg. And what I'd like to point out too is, a lot of these big banks, whether it's Rocket, Chase, Wells, what they've really gone to are these call centers that you alluded to.
Yeah.
You don't have a dedicated loan officer like you do when you're working with myself and with Jeff. You do a loan through Rocket, and a different person picks up the phone every time, has to, familiarize themselves with your file, and hopefully they don't miss anything. It's a completely different experience. I've talked to clients that we have gotten to convert over from some of these big banks, and they said that really is the difference. They're getting an actual consultation with us that, with a knowledgeable professional, as opposed to somebody that's essentially an order taker.
Yeah.
I think Chase is down to literally just a handful of actual loan officers around the country, and pretty much everything goes through a call center in Jacksonville at this point now. So you don't really know who you're going to be getting on the other end of the line. And furthermore, Craig, when we pre-approve somebody for you, I understand it's, we have a, reputation to uphold and a job to do for you as well. I mean, we're accountable to you. I find a lot of these lenders won't even return phone calls if a realtor tries to call them with questions.
100%.
So,
yeah,
if you're a perfect borrower with 40% down and an 800 credit score, going to one of those call centers, you might do okay with it. But, with your 3.5 or 3% down, first time buyers and things of that nature, I think they really need someone with experience that can consult them through the whole process and make sure that everything goes smoothly for them.
Absolutely. I have, I'm sure I work a lot with online leads, and I have so many clients that come to me. I say, hey, are you pre-approved? They are. And it's, better.com or one of those things where you can literally, while we're on this call, I could go get a pre-approval for myself for $2 million just by typing in the right answers that probably are not anything that could validate. So that's a conversation we have a lot. So, I'll continue to kind of ring that bell to stick with strategic and local lenders like you guys. So, but no, that's great. That's super helpful. And if anyone has any questions that's watching, please feel free to type them in or contact Joe or Jeff or myself. I can put you in touch with them, and let us know if you have any questions. But I'll move on to Jeff. Joe, unless you had anything else to add.
I'm good, man. The only thing I will add, whether you're, buying a house as a consumer, whether you're a listing agent, whether you're a buyer's agent, just make sure your pre-approvals were handled properly. Craig, you've seen it before, the how good is your pre-approval flyer that I made up that basically gives you which questions you should be asking of a lender. I'm actually happy when a listing agent calls me and says, hey, I got your pre-approval. I just want to make sure that you checked everything out. I then know that agent knows what they're doing. Okay. Yeah. It amazes me that a lot of realtors will accept offers on their listings without actually calling the lender and making sure that the pre-approval was handled properly. And, a lot of times I feel bad for the consumer because they don't know any different. We do this on a daily basis, so we know kind of what to ask, what to look for. But I can't tell you how many people I talk to, and they tell me, oh, yeah, I just filled out this thing online, and I gave them an estimate of what I make, and they told me I'm pre-approved for this amount. It still goes on out there. It blows my mind, but there are companies that do business that way. As you know, we don't. We take every single pre-approval that we put out there very seriously, and we understand it's our reputation, every single one of those that go out, and we're going to deliver.
Yeah, 100%. I mean, so when using my example that just fell apart, so I was reaching out to that lender regularly, and I was stonewalled, essentially. Couldn't get in touch with him. When I finally tracked down his cell phone number, he was very surprised to hear from me and started digging into the details. But, this was a listing. We didn't have a ton of offers. It's a very unique listing, and it was a unique situation as far as how they were financing it. But unfortunately, I wasn't able to get any sort of clear answer at any point. Now, if that had been even 2 or 3 offers, even just 2 offers, and I had called that lender and gotten that treatment and called the other lender and talked to someone like you, we would have never been in that situation in the first place. So again, it's I've been in situations where someone's using an FHA loan or a VA loan, and I get the feeling the other agent doesn't quite understand what that is. And I will definitely say, hey, if just so you're comfortable and your client's comfortable, you can go ahead and call Joe, and he will explain to you not only their qualifications but the program itself if you have any questions.
And that does bring another good point up also, Craig. A lot of these FHA buyers, low down payment buyers, conventional with 3% down, or USDA, no money down, VA with no money down. A lot of them really didn't have a shot in the past 2 years because there were so many cash buyers and a ton of down payment coming in. I got to tell you, we're getting FHA offers accepted, VA offers accepted, USDA. So it's a lot less competition than it has been in the past 2 years. And it seems like sellers are more accepting of, some of these lower down payment programs now. But,
they are.
Yeah,
and I think a big reason for that too is also there were a lot of appraisal concerns, especially once the market went to fever pitch, is if they were putting 0% down, people started acknowledging like, wow, I'm going to get $700,000 for this house, but they're also putting no money down. But we haven't had as many issues with that. And also the market has calmed down quite a bit. So yeah, they are starting to get accepted again. And I've had good luck with it, but in anything that's not just conventional, there are questions, especially if I'm presenting that offer to a less experienced agent. And again, that is so huge when I can say, hey, you know what, it's fine. Just give Joe a call. Joe can walk you through it. And that's huge. I love taking those calls. Yeah. And I've requested it as a listing agent too, because on my end, I know, I just went through the nightmare I just told you about. So, and I tried, but I just couldn't get a hold of anyone. So, but in that situation, we just didn't have any other options. So, but that's great. I appreciate that. So yeah, Jeff, you want to tell us about your program?
All right. So first of all, I am watching two different screens here. So if you see me, I'm not staring off into space.
Yeah, no worries.
And over here, it's something else. So, excuse me. Also, this is an energy drink. Someone on one of these the other day thought I was drinking at 9 a.m.
I love a good Celsius. Costco.
Okay, so for any agents on here, buyers, anyone who's having issues with possibly like home sale contingencies, making your offer stand out to get accepted, Movement just partnered with a company to create what we call our Purchase Power program. There's two phases to it, or maybe not phases, but two different, let's call them arms to it. The first of which, I think, and Craig, you can probably speak to this a little bit, we're probably going to be using a little bit less, is allowing buyers to make cash offers. Maybe on like the perfect turnkey house, this one might fit in, where, you have 10 offers and making a cash offer is going to make you stand out more. But I think with the market changing a little bit the way that it is, this one's probably going to be a little bit less useful, but it is available. And it's very simple. In essence, the investor will purchase the house for cash and do a quick closing on it. The client then will purchase the home back from the investor. A couple of points on it. They do have to have 20% down as a deposit, not a down payment. The investor holds that in case they default on something that with the program, because they did invest all that money up front. But if it is a first-time buyer who's doing a 3-5% down conventional loan, they will then refund that money back to them to allow them to put that towards their down payment or whatever they need to. So it's just held in escrow until everything goes through. The advantage to it is it does allow them to stand out as a cash offer, and then they can take their time securing the financing and get everything in place to purchase that back. The fees on this, depending on the purchase price and things, will range from roughly 3 to 5% of the total purchase price of the transaction. There is a, monthly fee of 0.7%, depending on how long it does take them to secure that financing. And for any agents that might be on here, you are not cut out of this. They don't just take over and take your listing or your buyer or whatever. The agent does represent the investor. on behalf of the buyer. So the commissions and transaction and anything like that is not impacted. So that one, relatively simple. The other one that we offer is called Forward. Now, this one I think is going to be very useful to a lot of people, be them buyers, agents, whatever it might be, because it does allow you to remove contingencies. So if you need the equity from your house for your down payment, if you maybe don't qualify because of a debt to income issue, this will allow it to take your existing home out of the transaction so that you can go in and purchase the home without a home sale contingency. So what they do is they will go in. Sorry, I lost my train of thought trying to switch screens here.
That's okay.
So they will purchase your current home from you and advance you up to 70% of the appraised value of it. So you don't have to worry about showings, living through the prep. If you have buyers who might have a little bit of, maybe seem a little flaky, so to speak, you can kind of wade through the offers and not have to rush to get your home sold so you can get that money out of it. As I said, they'll give you up to 70%, and it does depend on the area, the market that you're in. They do have in smaller markets some caps that are a little bit lower, but they'll pay off your existing mortgage for you and advance you the difference so you can use that to get your down payment done up front. Let's see here. So it works in kind of two separate transactions. They acquire the departing residence for an initial payment, enabling you to pay off the mortgage, get the cash out equity, whatever you need. Once the seller moves out, the company Zoom Casa that we've partnered with at Movement will prep your home for sale. They can bring in, designers, landscapers, anything like that. And I'll touch more on that in a second, to get your home prepped and set up and then resell that. And then they will recoup their fees from the difference of what you sell the home for.
Yeah, and that's part of what I really like about the program. That's no small thing there, because again, when people are doing this home sale contingent thing, they may not have a ton of cash available to do those types of projects.
Yeah.
So that's a really nice feature. But this is the whole home sale contingency thing has become interesting because, 18 months ago you couldn't wrap this up and gift wrap it and hand it to a listing agent. They'd be like, "Are you kidding me?" And that's gone away a little bit, but it's still not ideal. And like I said, 3 years ago, someone came to me and said, "I want to buy a house," and we'd go find a house. We'd put the offer in, and we were the only offer, and we got the house.
Right.
Those days are gone. So, it only takes one other offer for you to be in a advantaged situation. So, I get a lot of people that come to me and they're like, "Well, Craig, I am going to be home sale contingent, but don't worry, my home's going to sell super fast." I'm like, "All right, well, that's fine. But even more reason to be strategic about it. If you're not concerned that there's some big issue, then that will give us a little leverage. But the seller doesn't care just the fact that your home is quote unquote going to sell super fast, because famous last words. I just told you about one I had. That one is still on the market. It's been on the market for about a year now. That was one that, they thought was going to sell super fast, quote unquote.
Right.
So, I just think people, they think home sale contingency, they think about the quality of their home, and that's fine, but that's only half the conversation. So this really does give them a leg up in a situation that, a lot of people are struggling with lately, is especially on the home upgrades. It's usually a home upgrade.
Yeah. And from a lender standpoint, this thing works really well for us because probably about 50% of the time we get, you send us somebody who needs a pre-approval and we're going through it. And it's like, they have the money. Maybe they have, $150,000 in the bank. They have their 20% down, but with what they make, they don't qualify to carry both loans.
Sure. Yeah.
So they have to close the sale of the current home before we can close the purchase of the new one.
Yeah.
This takes that whole thing out of the equation, removes the debts on that end and brings the debt ratio down so we can get them in ahead of time.
Yeah.
And as you said, if, it is that the home is going to sell really fast, well, okay, that's just going to save you on the fees.
Yeah.
Makes this just less that you're putting out towards the company.
Yeah. Is there a time frame on the program of how long to sell the departing house?
So We had one in particular that I have done already. This is a relatively new program. We have done one. I believe they closed on. So to close on the house, they did it in about 3 weeks.
Okay.
And they will set this up ahead of time. So they can go in and do the appraisal beforehand while you're shopping. The appraisal is good for up to 6 months.
That's great.
And the borrower can stay in the home for up to 1 year
Oh,
while
wow.
they're shopping.
Yeah.
So they will cover the cost of the appraisal. You're not locked into any deal. So if by some chance you decide to back out, or like a seller comes along and says, hey, I'm going to buy your house before you go through with this.
Yeah.
You just have to refund the cost of the appraisal, which is $500.
Gotcha.
So we did one, actually, for anyone watching, with a colleague of Craig's in his office, and we got the appraisal done. It was taking a little longer on the purchase end due to that person having to find a home. So they had everything in line, and it took about 3.5 weeks start to finish, but we told them about 7 days beforehand, 7 business days beforehand, this is the close date. They closed it 3 days before the closing on the purchase. I believe Zoom Casa, in talking to our rep there, had the house resold in about 3 weeks.
Wow.
They went in, they did, a couple little upgrades on it, which, as I said, I was going to get to in a minute. So they will do kind of call it a la carte upgrades to your home. So if, let's say, as you move out, you say, you know what, I really wanted to paint, but I didn't have time. Or maybe I wanted to redo the landscaping, but I didn't have money.
Yep.
They have a menu, and you can go through and say, okay, well, I want, all right, let's paint, let's redo the carpeting and fix the landscaping. And it's going to cost, let's call it $3,000. I don't know, X.
Yep.
Then when you get to the end and they resell the house, the fees, whatever, all of that, this is just added into that. So you're not putting any money up front, maybe that you don't have, because you're using it to maybe upgrade the new house.
Yeah.
And this will increase, obviously increase the value that you can get and get you more for the house that you're selling.
Yeah. Yeah. I mean, I think that in particular gives, again, getting back to being strategic, because, we were getting the talking point all the time. Well, I know how the market is. So everything is, let's face it, this house is just going to sell. And it's never been like that. I mean, even at fever pitch, there were still some projects that you have to do. And they are still high impact projects, like a floor that is shot and needs to be replaced for $6,000. It doesn't matter if 30 offers are coming in. If you can take care of that floor, you are very likely going to benefit from that. So, but it doesn't matter if people come to me 3 months before they're trying to sell. It's that last stretch where things get frantic, and it could be a cash flow issue. It could just be timing. It can be whatever. So this kind of gives them a good, leverage to actually take advantage and make some strategic decisions about getting that house ready for sale.
Exactly. And it takes some of those roadblocks out. Craig, I'm sure you've had the people, you're listing a house and like, well, I really don't want strangers in my house.
Yeah. Oh, yeah.
So, okay, well, now you can move out, prep it, everything in place, and sell it late. They'll sell it later.
Yeah. I have clients here in Pittstown. They have 3 huge dogs, but they want to redo their floors. So that, it's like a non-starter. They can't take care of that until they get the new house, until they get the dogs out of the old house, and then they can think about doing the floors. So, I mean, it just gives a lot of flexibility. It's people get concerned about fees. They start thinking about fees, but you also have to think about the bigger picture sometimes. And, in this market, it's still a seller's market. So you got to do what you got to do to get to where you want to get. There are decisions that you'll have to make, and that it could cost you some money. But it will, at the end of the day, if you're going to live in that house, as Joe said, 5 to 25 years, do what you got to do to get in that house, Yeah.
And the fees, I mean, again, 3 to 5%, it is a large number when you start talking about home prices, but in the grand scheme of things, it really isn't a lot to even maybe get more if you're able to, like you said, redo the floors and stuff like that, which can't be done with them living in the house. Maybe I can get you that extra 8 to 10%. You're going to walk away with 5 of it because we had to give some to the investor, but you're still making out with more money.
Yeah.
And that's the fees on this are kind of a sliding scale for anyone who might be thinking about that in their head. Again, it's a 0.7% monthly cost for the time the investor carries the property, which is prorated per day. So if they resell it in 2.5 weeks, they cut that down. And the base fee is based on how much you take out. So you don't have to take 70. Maybe your mortgage is really small and you only need, let's call it 20% out of this to make something happen. All right, well, now that fee might be 1% instead of 2.8%. So it's hard to pinpoint exactly what it is. That's why I say 325. But, you can mitigate some of those fees too if you don't need as much.
Right. Yeah. No, I think it's a really great program. And I think, so many people are in this situation of trying to get out of one and get into another and be strategic about it, especially on those house upgrades. Few of us are lucky I say us, it's not me, but there are people that are lucky enough to get what I call the golden ticket of, yes, sure, you're holding your $400,000 house right now, but we're going to go ahead and qualify you. You're good to shop at 900,000, no problem. Hold those houses. But I mean, that's like such a small percentage of clients that I come across.
Small percentage of people that have that type of income. That's a small percentage that have that type of income.
Yeah,
so, I mean, and just realistically, how many people do you know that could afford 2 mortgage payments a month? It's few and far between.
It's not me.
Yeah, it's not me either. No, totally true. And again, I think unfortunately what generally happens, and I can think of particular clients on my end, is that people just wait too long to investigate something like this because they missed out on a house.
Right.
And that happens all the time. And then for the next, 5-6 showings, all they talk about is the house they missed out on. So I do like to try and get some, a spotlight on programs like this that are available that you will not find at, Bank of America or Quicken Mortgage or stuff like that. They don't have the flexibility of doing something like this. So, I try to get as many people over to talk to you guys about it as possible.
Yeah, and this is something that it's very easy to work with. Like I said, I've done one so far, and it was very seamless because we're doing the financing as well. So we are in touch with them, figuring out, okay, you have to close on this day. We're watching all the moving pieces, so the agent and keeping the agents informed, so everyone really knows what's going on. That's the great partnership with Movement and Zoomcasa doing this.
Yeah.
Whereas there may be some other companies out there, and you're trying to do it on your own, and now you have too many hands in the pot, and everything's getting all confusing.
Yeah. And, just to kind of wrap things up here, I want to give you guys a plug because you guys helped me out with a loan a few months back with my friend and my trainer, actually, but she's also a good friend of mine, Lori. And I was just talking to her this morning because, she's self-employed. She needed a certain way to do things. And I called on you guys because you had told me about the possibility of that program. And we got it done. It was no easy feat. And I know I harassed you guys a little bit throughout trying to get in touch with you. And I always made clear, I'm like, guys,
you're doing your job, bro. You're doing your job. You were on top of things. That's okay.
Yeah. And I said every time, I'm like, guys, I completely understand which aspects of this are out of your control. And it's most of them. I'm just checking in. But she's very happy. And what's very funny is, because of the program and being self-employed and the challenges attached to it, I think at the time she wasn't going to be, as we say, married to the rate. She was like, oh man, it's not what I thought I was going to get. I asked her today, I'm like, how do you feel about that rate now? I'm ecstatic about that rate. I'm like, yeah, they're over 7 now. So she's very happy, and it was a great experience. It was a very challenging situation with a lot of ins and outs, and you guys handled it great. So, I think anyone would be, fortunate to work with you guys. So.
Craig, one more thing that just came out on this Forward program recently that I didn't even know the last time, for any agents on the call, yourself included.
Yep.
Zoomcasa actually announced about a week and a half ago that they will advance 1% of the commission on the departing residents to the agents.
Hey, I can't complain about that.
Little selling point for you guys to talk about.
Yeah. I mean, commissions are not easy to come by these days. It is tough out there. So, anything that can help us out is, we're always holding our breath over here on stuff like that. So that's fantastic. But
I mean, again, they don't remove you as the listing agent on that. Like if you're listing and you're sending us your buyer and you're going to list their house, you can act as the listing agent for the investor. And that's where this advance will come in. Yeah. So you don't get taken out of your transactions by recommending this to your
and Jeff, client. Not for nothing, but that's a lot of times where my clients get concerned when we start talking about, we talk about it a lot with dual agency deals. because anything where they get the scent, we spend so much time developing a good relationship with our clients, and they trust us. And then if we introduce a program, we're like, well, are you still going to be involved in this? You know, I don't, there's all these up, there's a third party now. And anything that would compromise that is always a risk. So, you know, I had a call yesterday on one of my listings where the buyer said they were going to represent themselves, which is essentially unheard of in New Jersey. Not as a realtor, they're just a person. They just want to represent themselves.
Yeah.
And I actually had to look into it because I'm like, I don't even think. And I checked with Teresa and I checked with my main attorney I use, and they're like, I've never heard of it. Like, that's unheard of. But my seller got nervous because she said, well, what does this mean? If we're going to do a dual agency deal and she's unrepresented, I'm assuming that means you're going to have to help her quite a bit. And I'm like, yeah, probably. I'm going to have to take her to the inspection and the appraisal and everything. And, you know, immediately my client is like, well, I like what we have going here and I don't want to get away from that. So it's good that you point out with this program that no one's asking them to, all right, well, you're not working with Craig anymore. You'll be working with these people for the listing.
Yeah, they basically are just the money people. You handle everything as you normally would.
That's great.
Craig, I'm pretty sure if we were cutting realtors out, we would not be on your show right now for promoting this. So,
very true.
You know,
very true.
We're trying to make sure everybody wins, man. That's the whole goal at the end of the day is you want to get that house sold. The buyers want to sell their house and get the new one. We want to get the mortgage. Everybody wins. You know, that's the idea. We always try to create a win-win-win for everybody. So, yeah,
that's fantastic. Yeah, no question on my end from working with you guys that's always you know, appreciated. All right, well that's pretty much all I had, and we're 46 minutes in, so that's usually about what I run on these. So Joe, I finally get a peek at your cichlid tank. We'll have to.
That's the South and Central American one, but you got to swing by. I got 3 in the house, so.
Oh, that's nice. Yeah, I got 1 African and 1 saltwater tank going. So yeah, that's very cool. There's not a lot of us out there, Joe. It's a small hobby.
Dude, I've been keeping fish a long time. I've been doing it since I was a kid. My kids love it too. So
yeah, mine too. That's fantastic. All right, well, thank you, gentlemen, so much. I'm sure I'll
Thanks
see
for
you.
having us.
My pleasure.
Yeah, it was great hearing from you, and I recommend anyone to go talk to you guys and be strategic. And
come on anytime you want, Craig. Let us know, buddy. Thanks.
Yep,
much appreciated. All right, thanks, gentlemen. Have a great Friday.
You too.
All right, so that was Joe and Jeff from Movement Mortgage, 2 colleagues I've been working with for a very long time. Great guys, you know, super sharp. And, you know, for one thing, I'm aware my microphone is not working, so I don't know what this sounds like. I'm sure you can hear me, but it's not up to my standards. So, but anyway, these guys, you know, it's guys like Joe and Jeff that can be very strategic with clients. And, you know, nowadays you have to be strategic at every step. I cannot tell you the difference in experience with clients I have that are working with banks that don't have guys like Joe and Jeff. That mortgages are not one size fits all. Every situation is so different. And even, you know, from my perspective, every client's buying situation is so unique. They have to buy or sell something. They have a limitation of some sort. They have a certain type of program they want to use. And just having that strategic relationship with a lender is so important, not only for the client, but also for me, because I need to be in lockstep with the lender in order to present a very strong offer. So thank you so much to Joe and Jeff for swinging by. I thought that was great. And yeah, if you have any mortgage questions, I saw quite a few people swing by. Please feel free to post in the comments or shoot me a text or email. I probably will have those guys on again at some point. And, you know, if we have a couple questions preloaded, that's always appreciated. So thank you all so much. And hope you're all having a good Friday. And take care. Be well.